Thanks everyone for joining us today for the Australian Mortgage Innovation Summit. So today's panel session is about open banking, and we're calling it a pivotal event for the mortgage industry. So looking at the role of open banking for both consumers, but also for brokers and lenders, and looking at technology and innovation as well. So my name's Anna Shaw, and I'm Head of Client Insights at RFI Group, and I'll be moderating this session today. And with me, I have three panelists. So Tony Carn, who is the Chief Customer Officer of NextGen, Darren Little, who is the CEO of Smartmove, and Alex Boorman, who is the Managing Director of Consulting for RFI Group. Now I'll hand over to my panelists to introduce themselves a little bit further and also give us a little bit of insight into why open banking is important and interesting to them. So Darren, I might start with you to introduce yourself.
Yeah, thanks, Anna. Darren Little from Smartmove. We're a mortgage broking business based in Sydney, and customer is the total focus for Smartmove. You know, making sure we give that really consistent, amazing customer experience, and it's something we've been doing for 18 years. We don't advertise, so we're very reliant on that good customer experience. What excites us about open banking coming in is it's going to really, we believe, help us with making that frictionless transaction for our customer, improving that experience and allowing more time for our team to actually focus on the advice they're giving customer rather than looking for all that data and that we're currently having to do, and making it easier for our customers to do business with us.
I think that's always what we want, making it easy for customers, and I think that's going to become even more important as we go through. Tony?
Thanks, Anna. Look, I'm fortunate enough to be Chief Customer Officer of NextGen Net. NextGen Net, look, our mantra is really about making lending easy. We process generally between around 60 to 70% of all mortgages in Australia, and we're deeply integrated with the entire third-party market, so the mortgage broking distribution ecosystem, and then we plug in to over 50 lenders. So we're actually all around enhancing quality at the point of sale across data, serviceability of applications, the collection of supporting information and supporting documents, and also ensuring quality at the point of sale. And then being able to hand that over on a quality basis to a lender to actually process that, typically in a straight-through processing manner, because technology doesn't really achieve that. It's actually quality in the application. So that at a very high level is a very sort of summary of NextGen, who we are.
Fantastic. And Alex?
Yeah, thanks, Anna. So Alex Boorman, my name. So I'm the Managing Director of RFI's consulting business. In the last 2 years or so, I've overseen a number of different research studies focused on the topic of open banking, conducted among consumers and among small business owners. So I'm really here today to provide that perspective. I think the way we see open banking is potentially pivotal in terms of the way in which financial services organisations, consumers, brokers, any other stakeholders in financial services interact with one another. It's really about providing an opportunity for customers to have access to better, more personalised products, enhanced experiences, easier experiences, etc. So yeah, absolutely of the view that open banking is potentially pivotal to the way that financial services in Australia works.
Thanks, Alex. And looking at the RFI research, what has our research shown in terms of consumer openness to open banking and even that understanding of what open banking means?
Yeah, so absolutely. So the last time we asked consumers their awareness levels of open banking, we got 16% of consumers saying that they'd heard of the term. Now, importantly, what we then did is we asked them, well, okay, if you think you've heard of the term, what's your level of understanding of it? And that's where we got next to no understanding. And we shouldn't be surprised that that's the case, because consumers are not really being spoken to about the topic of open banking by their financial services organisations, by any other commentator. So we shouldn't be surprised that consumers haven't heard of the term or don't understand it particularly well. However, what is interesting is once we explain the term to them and explain what it could potentially mean, that's where we get much higher levels of interest and appetite and desire to participate. So we get about a third of consumers interested in the notion of open banking. That increases to more than 1 in 2 if you focus on consumers under 34. And I think that's particularly interesting when we're thinking about financial institutions and the way in which they engage with those younger consumers. So that's centennials and millennials. Those are the consumers that are really excited by it all, much less concerned about security and privacy, much more able to see the upside for them. So that would be our view, that they would make up the early adopter segment. They also are much more excited by some of the propositions that we know will emerge in an open banking environment. And no doubt we'll be talking about some of those propositions in this session, but things like easier and quicker applications for credit, more personalised advice, etc. It's that group that's really most interested in them.
Yeah, great. Thanks, Alex. And I think that awareness gap is quite important when we talk about open banking and thinking about how consumers, even that level of basic understanding of what it is and what the benefits are that they could access. Tony, from your position, thinking about the benefits of open banking, what's sort of your perspective on open banking and what are you doing in this space?
Yeah, look, I think Alex has hit the nail on the head. It really is a pivotal moment for the industry. And look, there's a lot of benefits and particularly, you know, as Alex touched on with consumers and seeing how that can open up a lot of doors for them and a lot of benefit. Some of the key benefits we see delivering is in the domain, obviously, of lending and particularly mortgages. So as an organisation, we see it as an enormous opportunity, and it's a key evolutionary step in the way mortgages are managed in the Australian market. So if we go back 15 years ago was when we just saw the first digitisation of mortgage applications, and it didn't take off overnight. But now it is the standard where 99.99% of mortgages are processed digitally. From there, we saw the evolution of embedding serviceability rules into applications for lenders, generating a bunch of APIs that were used by different parties along the way, building dynamic document checklists and upload capabilities into applications over the last 5 to 8 years. And in the last 1 to 2 years, we've seen a lot of built-in compliance into that application process. So what we're seeing now is open banking, obviously now empowering open data, and importantly within a robust regulatory framework. And that's a really, really critical point. We've seen a lot of screen scraping technology in the past that hasn't really been adopted, and a key reason, apart from, the complications with T's and C's of internet banking, was the lack of a regulatory framework around it. Enabling CDR to become intricately embedded into our apply online application ecosystem is really important. It's a big opportunity from the applicant across to the loan writer and the lender origination process. So the question, what are we doing? And it's really exciting for us. We've made a very significant investment. So joining the NextGen family in July last year was Frollo. Frollo is an amazing organisation. They were the first fintech accredited by the ACCC for open banking and accredited at an unrestricted level. So they've been a real clear leader in the personal finance management, money management app space. And they're now under full steam in assisting a bunch of ADIs become CDR ready in the provision of CDR gateway services, outsourced service provider and SaaS integration platforms, and helping to empower those personal finance management apps with a range of institutions as well. So look, we've invested really significantly, which I think is reflective of our level of excitement and focus on it.
Thanks, Tony. And I think there's that common theme about making things easier for customers. And I think that's something that does seem to keep coming out as a key theme when thinking about the benefits of open banking is making things easier for customers, but also for lenders and for brokers. So Darren, from your perspective, what are your goals for Smartmove in the next 12 months? And what opportunities do you feel open banking could provide both for customers, but also for brokers?
Yeah, look, sorry. For us for the next 12 months, it's just continuing. How do we make it? And I keep using the word frictionless sort of thing. And I look over the last couple of years. Tony sort of talked a bit more of the journey that we've been on over the last, say, 10 years with docs online and those type of things for our brokers. But really, what we're starting to see now is that with open banking coming is the real empowerment of that customer having control of their own data, and giving their trusted advisors and that's really our motto is, to be those trusted advisors with our clients. So we really think it's going to be a significant impact for both our brokers and our customers. If I even look, it touched just a moment ago on scraping and that, 4 years ago when that started for us, it was really low take-up rate. And I think to Alex's point, around sort of that younger group of consumers, I look now that, 76% of our customers are very happy to use that environment sort of thing. So whereas 4 years ago, it was a really, challenging piece. So that acceptance rate, I think it's because not only is the broker talking about it, the whole industry is talking about how we make it easier, sort of thing. So I think, for us, open banking, the more we can sort of get involved in it, the more we can have things embedded in platforms and those type of things to actually make our life easier. That's absolutely our focus.
Fantastic. And on that topic, what do you see as the biggest advantages of open banking?
Look, for us, our thoughts around it, it's just, we've talked about credit quality a lot, file quality and customer quality. But for me, it's probably broader than that, because you look at the ability, one of our big pain points at the moment as a business is about our onboarding experience with a new bank. There's so much refinance activity at the moment. And when they're onboarding and going to a new bank and onboarding, we think, the open banking is going to help that, make that a lot easier. Things like the income and expense verification. Yes, it's going to require policy changes at banks and the way they're going to view things and those sort of things. But all of a sudden, we're dealing with source data rather than having a pay slip or something like that. And that to me, they're really big, significant wins. And that whole quality piece that Tony sort of talked about, that just comes all the whole way through it. And as a business that's really process driven and focused on continuous improvement, having quality, we're quite excited about the opportunity that it does present.
Yeah, absolutely. And I guess when thinking about the role of technology in making some of these solutions a little bit easier for customers and for brokers and lenders, Tony, from your perspective, how do you see solutions offering in this space when we talk about technology and how that technology will help maximize the benefits that both CDR and open banking could bring?
Look, I think the first point to make is while parties like ourselves would like to see that embedded overnight, it is going to take time. It's not an overnight sensation, like all the sort of evolutions that we've seen in our industry. But what we're seeing evolve at the moment is a growing awareness and adoption. And I think that's really reflective in the comments that Alex and Darren have both made around consumer readiness and awareness. I think what we're also going to see evolving in this space is really a tale of follow the money. As Darren said, removing friction out of the process is critical. Having reliable data with that regulatory framework around it and being able to rely less on documents and manual assessment of them, and being able to deliver a better time to yes, and taking the burden off resources in the mortgage processing ecosystem. And to put in that perspective, if you look back at 2020, which was a record year for application lodgements in mortgage world, but we saw in Australia over 1.4 million mortgage applications. Back of the envelope, that represents around $700 billion in applications. And when you break that down and start to look at, well, what are the costs associated across lenders in processing that? You're looking at a figure easily in the range of sort of $3 to $5 billion per annum. And if you look at the introducer market that Darren's so pivotal in, the processing costs across the broker market too, you're looking at sort of circa $2 billion plus per year. So what it tells you is, what are the efficiencies in reducing that burden on resources and actually driving costs down? So I think that's going to be a main, carrot and stick approach in driving that, and obviously at the same time producing really good consumer outcomes. So I think lender readiness is really important. I think leadership of lenders is really important. And we're already starting to see a number of lenders investing in the evolution of incorporating open banking into their application and approval process. So I think we're going to see a number of lenders emerge as lenders in the near future, and they'll be the first to really benefit through their enhanced value proposition and their return on investment that they're achieving.
Yep, that's a really good point. I think around what needs to be done, what also, I think there's a bit of responsibility on both sides as well in terms of what the lender needs to do in that responsibility as well. And I think we've spoken about some of the benefits, and on the other side to that, there will be some barriers for open banking being utilised in Australia. And Alex, I'd like to hand that question to you on the topic of what barriers do you see there could be for open banking? We've touched on the awareness barrier, but what else is there?
Yeah, so certainly we start with awareness, and very evidently that needs to increase, and it will, because increasingly consumers will hear about it. They hear about their friends and family members and the experiences that they have, and that helps address the second issue, I think, which is comfort. Consumers need to be comfortable with the notion of sharing data. They need to understand I guess, the terms under which that information is shared, who it can be shared with, what it can be used for, how they can control that narrative around data sharing and access and use, etc. So that's important. I think it very much, I think familiarity will help a lot. Consumers will become more, will see things in the interactions that they have with financial institutions that will render the topic of open banking and the use cases more familiar, and in turn they'll become more comfortable. Another thing I think is we also ask consumers about the organisations that they're most open to engaging with from an open banking perspective. And when we ask that question, we give them a fairly exhaustive list of different organisations that we felt could potentially participate in open banking. And one of the interesting things emerges is that consumers are most comfortable engaging with their current main bank. That's the organisation that they're most comfortable sharing information with. And in that sense, I think we should view open banking as a way that incumbent institutions, or the institutions that already own those customer relationships, for them to enhance the way that they serve those customers. And first and foremost, I think that should be seen as that, rather than a threat that will significantly disrupt the interactions that consumers have or the organisations that they're dealing with. I think that's very important, and I very much urge organisations to see open banking in that light, because I think it should result in sort of more openness to pushing the envelope, I suppose, from an open banking perspective.
Thanks, Alex. Something else that has come out in terms of the last couple of years, following the Royal Commission and even now with the pandemic, is that customers are looking for certainty of costs, and they're also looking for transparency of pricing. And this is something that we've seen become increasingly more important. How do we think that open banking can allow for more transparency with pricing and also more tailored pricing based on customer circumstances? Alex, I might hand over to you again just for some
sure. So
the research.
Certainly on paper, open banking should result in lenders being able to make faster, more informed lending decisions. That should result in consumers receiving more personalised offers, more suitable products. Consumers ultimately having a better fit, I suppose, between the consumers and the products that they're using. Now, that has to be good for the market. It has to be good for consumers. It should result in consumers being more informed about the products that they're choosing. It may well result in consumers switching between products as well, because it may well result in organisations being able to target consumers with more enticing offers. Now, whether that does result in higher levels of switching is to be seen. Obviously, we know that there are some barriers which typically prevent consumers, or some consumers, from switching products. Open banking will reduce those barriers, but it won't eliminate them. I think that's important.
Darren, did you have any perspective on that from that mortgage and broker space?
Look, I think from our perspective is we feel that just having that transparency in the data, it will allow us to have a better understanding of our clients' needs on an ongoing basis if they allow us that trusted position of the continuation of the data. I suppose when you sort of look around the world at some of these other places that have gone with open banking and the broker space, there's a lot of gamification, I feel, gets done for broker businesses with their clients, and because there's different hurdles for different products, and especially when you've got your credit scoring, you've got your income, you've got your expenditure. There's quite a lot of different dynamics that make up how a customer can actually get finance. Whereas with open banking, and if we've got that continuous feed concept, that really will allow us as brokers to be really informed, making sure we can get our customers, the best offering that's available in the marketplace. And now with best interest duty that's come in, from January 1 this year, I think it's a really great segue with open banking to support that.
Yeah, absolutely. And I think anything that enables customers to better understand the product they have, the rate they're paying, is going to be really important. I think especially this year when customers are just looking to have certainty of what they're paying and what they owe each month. And I think, keeping that as clear as possible is really important. Tony, did you have any thoughts on this topic as well, this idea of transparency of pricing?
Yeah, definitely. I think I really echo what Alex and Darren both said. I think there's huge immediate opportunity, particularly at the consumer product level, such as personal lending, credit cards, and also savings accounts when you're looking at transparency of pricing as well. A lot of those products are large margin products. They're often less regulated than a mortgage. And at the moment, we're seeing quite a growing uptake of personal finance management apps. They play a really important role in assisting in that space now and looking at what the transparency is across pricing and offerings in the market. So I think, we're already seeing that take up, and it's got a long way to run out too, and they're getting great engagement from consumers, those personal finance management apps, such as the Frollo app. In the mortgage space, Darren's made a really good point. I think there's already considerable legislation directed at transparency. And we also see, I think interestingly, 60% of applications are being originated in the third-party broker distribution space. It's backed by best interest duty. It's backed by people who have that intricate knowledge across a lot of factors, not just limited to pricing, but what's the products, what's the process, what's the turnaround times, what's the suitability. And we're also seeing further legislation such as the DDO legislation coming in current months as well. So, look, I think overall I agree with those comments wholeheartedly.
Something you touched on was personal financial management tools, and I think that ties in nicely with this idea of innovation. And Darren, I want to ask you, how do you think open banking can enable mortgage providers to be more innovative? And what could this innovation look like, and how can data be leveraged to provide those better customer solutions?
I think Tony's jumped my gun a little bit, with his comment around personal finance management. I think that's, over the last few years, there's been a lot more focus for us as brokers in relation to living expenses and those type of things. But where I think the open bank is really going to open up is actually really helping us be really having that personal finance management and that budgeting piece really to help our clients predict and be part of a journey. So rather than transacting at a time today, actually be more involved in their journey, getting them ready, for transactions. So, whether it be, Anna, you might be looking for a first home and you might be 12 months away from it, but this is when we can use, the data coming through to actually help our customers on a goal setting style of approach. And that, I think, will make a massive difference for our mortgage brokers in Australia. Then if you sort of look at, existing customers that we have, and then it's really with that data feeding in, as I was saying before, it just allows us the ability to make sure our clients really do have the right product set. We can have automatic valuations, credit, all those type of things that we can keep feeding into it to make sure that our customers are consistently best place. At the moment, we're doing it, but it's all very manual. So that's where I think a lot of our efficiencies will come from it. Instead of having to speak to the banks on the call centres and in those sort of things, we can have it feeding automatically, which all that comes back to is a productivity improvement, and then a better customer outcome because we can actually spend more time with our customers.
That's really interesting. And I think, can you sort of imagine a scenario in the future where there is that more holistic experience where customers are supported with that savings journey to get the property and then even the ongoing maintenance of that product? And is that something that you think is something that brokers will be uniquely positioned to offer?
I'd really love to see eventually through tools, and technology that, we can have a first home buyer come in and, we know what their income is and, say their income's going up and down. You can actually get a pre-approval that could go up and down as their income and expenditure goes up. That's a bit of a pipe dream sort of thing, because obviously that's a lot of work to get to that. But that's, I think, where we could go with this automation, and having that type of experience for a customer, and then it's sort of, I mentioned sort of the gamification before, they start doing overtime, they start getting more income coming in or whatever, that income impacts on their pre-approval. That's where I think we can go with this.
Yeah, I think it's really exciting as well. And I think that anything that can help customers just have a really good experience and have that ongoing support is going to be really, really well received, I think, by customers, and also maybe could even help with that relationship with customers and their lender and their broker.
Yeah, absolutely. I think just the awareness of what's potentially out there, and that's the onus of all of us, to have that. It's not just a broker or a bank or something like that. I think Alex made that whole commentary around open banking, and as that starts to build, I feel that's going to really grow. And I think as customer and consumers really start to take control of their data, that's going to make a massive difference. Not in year one, but I think year 2, 3 down the track, it'll really start to turn.
Yeah, absolutely. I think if we think about the loan acquisition and processing space, Tony, a question for you would be, what do you see as the opportunities in leveraging CDR's potential in this acquisition and processing space? So that part of the journey, what do you see as the opportunities there?
Yeah, look, I think coming back to my earlier comment, there's huge cost efficiencies in there, and that's always a really good driving tool. But I think just removing friction and better utilising data in that process. So it's about making data readily available in close to real time via a simple process for a consumer to exercise their consumer data right. So having access to robust data in that regulated framework is a really important first stepping point. It's then around using that data in the process and enriching it. So it's utilising raw aggregated customer data and then using AI to enrich that into standardised categories for use throughout the application process, whether it be income, whether that's PAYG, dividends, rent, etc. It's also loan repayments. It's other commitments that a customer's going to have, and also living expenses are very important. I'm proud to say, look, a lot of these things, I think will come to fruition a lot closer than we expect. We're now at the stage of having developed that enrichment of data and very enhanced, and it's very exciting for use in the ecosystem. So I think with that data, it's then just simply about integrating that data into the process that is there today and enhancing that process, whether it's by using it to use in an application process or informing an application. And that's a really important term. I think, there could be a lot of misunderstandings around how this data could actually disrupt the process in a negative way. But using open banking data to inform an application is really important, because it's a big friction point now where we see an applicant declare one thing, a lender then pours through a bank statement or other pay slips and they assess it differently. Open banking enables that data to inform an application and say, hey, look, I'm declaring this in my application. My data says this, but here's a clearly enumerated reason as to why the difference is. And that in itself in the process can significantly remove, by informing the application and enumerating the differences to a lender, can remove a lot of more information requests, reworks, costs and delays. So I think it has a huge opportunity going forward.
Thanks for that, Tony. And I think you've touched on some of these use cases, which is leading into my next question. And I might start with you on this one, Alex, but thinking about the fact that younger consumers could be more open to providing access to data if they can access benefits. What can you tell us about what the data has shown about some of the potential use cases for open banking, and what sort of is resonating with a customer in terms of what they'd be interested in accessing?
Yeah, so I think it's really critical that when we think about how open banking becomes real for consumers, and that we focus on experiences where perhaps there's friction, and we've spoken a lot about friction, but ultimately what we mean there is where there are pain points for consumers, experiences and processes that perhaps don't pan out as easily as we would like them to for consumers. And one of the things that we've spoken about a lot here is around being able to enhance the application experiences that consumers have. And we know when we ask consumers to reflect upon how they feel about their mortgage lender and their broker, that the application experiences that they've had really determine how they feel. And the memory of an application experience, good or bad, really lasts. So for example, we find that if a consumer's had a good application experience, even years after that experience, their advocacy is higher, their satisfaction with their loan is higher, the number of products they hold with their lender is higher than consumers that have had a bad application experience. And that's really key, I think, about understanding the long-term impact of an application experience, be it good or bad. So to answer your question, I think where open banking comes in is, certainly should enable consumers to have much better experiences when they're applying for loans. And we know, in many instances to this point, consumers, some of them do have experiences that aren't perhaps as good as we would like them to be, the experiences that are harder than consumers expect them to be, processes that take longer than consumers expect them to take. Consumers having to provide, excessive documents and essentially work harder than they would like to in order to secure a loan. And that's not a great start to a relationship with any organisation, be it financial services organisation or other ones. So I think that's where open banking can really help, is in terms of getting that relationship off to a great start. You know, the relationship between the consumer and the lender. And once it gets off to a good start, of course, then there's the opportunity to foster that relationship into a deeper one over time.
Yeah, thanks, Alex, for that. And I think it's a good example of how that ongoing experience with the lender is quite important, even in thinking about retention. And if it's going to become easier for customers to switch, if they didn't have a particularly good experience, there's no real reason why they'd feel like they need to stay with that lender anyway. So really improving that experience, I think, would be quite important for a customer, from both that onboarding experience to that long-term, you know, it's a long product, they're going to have it for a long time. So actually helping with that ongoing experience as well. Darren,
just on that, it's interesting, just on Alex's point. So we do an annual survey with our client base over our last 17 years, and it's that lasting impression of a onboarding experience. And I'm not talking about when they physically are starting the transaction. It is actually the application process has such a lasting impact. And we pick it up in our annual survey. We see banks that it is easier to do transactions with. Their advocacy rates for us as a business is significantly more. They're going to refer more customers to us. And that's why as a business, we're really focused on, you know, using banks that actually make it easier to do business with them, because it's not easy. It's easy for the broker to do the transaction, but it's that customer experience has such a long-lasting impact. And just simple things like, maybe in the open banking world, you know, the bank statements and those type of things. So having all that data of expenditure, income, and that versus having to go down and get, you know, last 6 months worth of bank statements downloaded or something like that. Simple things, but the expectation from our clients is that we can have that today. We don't have to go down and, you know, get the bank statement stamped at the branch with the date stamp and those sort of things, because, you know, some of the banks still are requiring that as of today. So versus that seamless, frictionless experience for a customer onboarding. Yeah, then when they go to the, you know, with that bank, then it's up to the bank to, you know, embed that new relationship, because a lot of the time, you know, those customers are first-time bank customers when they're coming with a home loan. So it's a great attraction tool for the bank, but it's not just the actual physical onboarding. It is that process that really has that lasting impact.
And I like that comment as well about the fact that you'd prefer to work with the lenders that make it easy as well. So it's sort of giving the customer a good experience, but also giving, you know, the organisation a good experience to keep referring that lender to your customers.
Yeah, as I said, we don't advertise, so we rely on that great customer experience. So if they're going to a bank that they're going to be really happy with and want to be there, you know, for a long time, that's fantastic, because that means they're going to be happy with the bank, but also happy with us as a brokerage for placing them at that bank.
Yeah, it's kind of the best case for everyone, really.
Absolutely.
Tony, did you have any further comments on the use case for open banking in the mortgages space?
I think another interesting lens to look at it through too is, you know, empowering not only the broker or the loan writer, but empowering the customer and understanding their data a lot better too. Darren touched on, you know, the personal finance management apps and being able in the life cycle to engage with customers earlier in that getting fit for finance process. But I think a thing to fall out of that too is the ability to start building reliable financial profiles for customers, and extending that not only to understanding their data, but who they qualify for a loan with and where's the best place for them to go. I think that customer having a better access, understanding and ownership of their data plays potentially into, you know, a bit of a pivot in the potential repeal of responsible lending laws, where if there's an onus back on the customer, partly it's important for them to have access to that data and understand it properly and be better aware of the journey that they're undertaking and where they're going.
Yeah, absolutely. Thanks, Tony, for that. I think there's so many interesting use cases, and there's quite a positive outlook, I suppose, for, you know, the next couple of years, where customers can be having better experiences, lenders can be, you know, offering better experiences as well. And part of what we spoke about in the beginning, as Alex touched on with the RFI research, was that there are some knowledge and awareness gaps and some barriers there. So Alex, what do you think will need to be done to actually increase consumer awareness of open banking and the benefits that these customers could actually be accessing?
Yeah, so I think at the crux of it is really financial institutions need to start talking to their customers about the topic of open banking, framing it appropriately, addressing some of the concerns that consumers have around some of the things that we've touched on around privacy and security and consent, etc. Starting to reference some of the benefits that consumers may derive from participating, because for every consumer, it's going to be a trade-off in their mind between, you know, how comfortable am I sharing my data with provider X versus what's the benefit that provider X can deliver me, and if that benefit is compelling enough, then consumers will choose to participate. And we spoke about it before, but I think ultimately things will snowball where one consumer participates and then spreads the news of the great experience that they've had to two consumers, and those two consumers then participate. Track record suggests that Australian consumers generally are, relative to international comparison, they're quite quick at adopting new technologies and new processes from a financial services perspective. So, yeah, there's some examples that aren't directly relevant, but, you know, contactless card usage, mobile payment usage, some of those things have taken off more quickly in Australia than in other markets, and that suggests that consumers here are comfortable doing things that perhaps they haven't done before, and seeing the benefit that new processes and technology can deliver them. So I think that's really important. But, you know, at the crux of it, I think, is really a concerted effort by stakeholders who have an interest in the mortgage market, or indeed in any other product category, concerted effort by those stakeholders to educate consumers on the topic, and also excite them as well. You know, ultimately what we're looking for here is consumers to be excited enough by the notion of open banking to say, okay, well, I will give that a try. I will do that, and we certainly expect that open banking will enable the experiences that consumers have to be so good that they'll be eager to participate again, and eager to participate on an ongoing basis.
Yeah, so I think there's that key theme that's come out, is that when customers are having a good experience, they will advocate, and they will in turn encourage other people to have these good experiences with the lenders that are really offering the tools that help customers have that end-to-end process, including the onboarding, but also that ongoing experience with their loan. I think to wrap up today, I just wanted to ask the question of all of you, which is, what should lenders or consumers do to be ready to, so on the lender side, what should lenders be doing to compete, and what do consumers need to be doing to be ready to access the benefits? So Tony, I might start with you on that one.
Yeah, thanks, Anna. Look, it's a really, really good question. And I think from a lender perspective, what do they need to be doing? Unfortunately, we're seeing it already with a number, is starting to invest in platform evolution to utilise the technology to its full capacity. And that can be very much a motherhood statement. I think the brutal reality is, at the same time, is that there is a scary number of antiquated platforms in the Australian lending market. It's scary. So I think it's a real evolutionary or pivotal change that lenders have to be thinking about also. But it doesn't have to be huge, and they've got to be careful of not building bespoke platforms that don't really integrate with the broader market or align to how things are occurring in the bigger mortgage ecosystem. So I think a really important thing, unashamedly to say at the moment, is engage reputable expertise to get a lie of the landscape of what the future may be. I think, lenders need to question their path often that they're on. Are the tools and the people they're listening to making that grade? Because when you get a pivotal moment like this, some lenders will be very forward thinking and get it right and nail it. Others won't, and others will be like the emperor with no clothes, dare I say it. So there will be a Darwinian change management and evolving practices occurring in the future. So I think then coming down to an individual level, for borrowers, it's very important to have hand-holding. So for loan writers, it's important to capitalise in the future on that opportunity. And you don't need to be a subject matter expert now, but start to familiarise yourself with that technology and start thinking about, how do I nurture someone throughout the life cycle of a loan and getting them financial fit using a personal finance management app. And that's quite topical at the moment, and a lot of activity in that space. But particularly at an individual level, I think it's simple enough. Familiarise yourself with the technology, just at an app level. Go and download a money management app. So the Frollo app, which I mentioned earlier, it's a great example. Download it. Unashamedly promoting it. It's just won the Mozo Experts Choice Award for 2021. So it's a good opportunity. Download it, see how it works, and begin on that journey of understanding it.
Fantastic. Thanks, Tony. And Darren, anything you wanted to add?
Probably for me, the big thing at the moment is education. Look, from a brokerage point of view, brokers in Australia need to start thinking about how this is going to look in their business, and also how we can help that education piece that Alex talked about with our consumers. That starts today. We can get involved today and really start to not fear it, but actually promote it and really get our consumers ready for it. So when the ability to get hold of it, we're well placed. And I think that's the big thing for us is education today, at a personal level, but also how do we educate our clients today?
Yep, absolutely. And Alex, any final thoughts?
Yeah, just concur with what's been said, I suppose. But I think number one, from a lender perspective, to look for the small points of friction in the process, and to be open-minded about how open banking can address those small points of friction, because by removing 2 or 3 small points of friction, we have a much better end-to-end experience for the customer. I think from a consumer's perspective, just to be open-minded, I suppose, around how open banking may deliver them a benefit. To use some of the personal financial management tools that we've mentioned, to consult people that they trust from a financial services advice perspective, that will help them understand open banking and some of its use cases and benefits perhaps better than they otherwise would. There's lots of information out there there will be lots of information out there that consumers will be able to have access to. We certainly hope that lenders start engaging with their customers on the topic, and therefore consumers will be able to find out more, and certainly to just be excited, I suppose, around what benefit open banking might deliver them.
Yeah, I like that final point around it is exciting, and I think there's a lot of positive. There's going to be a lot of advantages that could come from this, and I think, like we've touched on, it can help customers and brokers and lenders and just sort of the industry as a whole. So I'd like to thank my panel today of Alex, Darren and Tony. Thank you for your perspectives, and thanks everyone for dialing into this session. It's been really interesting for me especially, and thank you for your time.
Cheers.
Thank you so much.
Thanks.
Thanks.